Hello everyone, and welcome back to Coin Bureau Clips' weekly Metaverse update. It's been a big week for Web3 while the sector continues to recover from the early months of 2022 and that temporary collapse in interest. However, with Metaverse and NFTs again on the rise, we have some interesting developments to bring to your screens this week. Now, in a recent video here on the Coin Bureau Clips channel, we spoke about some of the potential factors behind the resurgence in the price of Sol. These included Coinbase wallet integrations, inclusions in new fund investment products, big news for gaming on the Solana network, and, crucially, the announcement that OpenSea would begin offering buyers and sellers on its platform the ability to get their hands on Solana NFTs. So let's first take a look at how that has impacted the Solana NFT ecosystem so far. The Magic Eden marketplace currently dominates more than 90% of Solana NFT volume, though this may be set to change once Sol NFTs actually become available on OpenSea, something expected sometime in April. Announcements around the integration were first given coverage on the 30th of March, and the revelation has certainly had some effect. According to data from DappRadar, between the 30th of March and the 1st of April, Magic Eden's transaction volume rose from 33.7 million to nearly 45 million, an increase of 33.5%. However, since then, volume has waned to just $28 million yesterday. Perhaps suggestive of a sharp buy-up followed by collectors holding onto those Sol NFTs in the hope of future price increases. Now, interestingly, however, the number of active users of Magic Eden slumped from around 40,000 on the 31st of March to just under 29,000 on the 2nd of April. Could this be due to buyers waiting for OpenSea to complete integration before parting with their NFTs? After all, the excitement around OpenSea's integration is based on the conjecture that it will allow a whole host of investors better access to the Solana NFT ecosystem. Suffice to say, we haven't seen the massive sustained increase in buyers and transaction volume that one might expect to follow an announcement of this magnitude. However, it's a slightly different story when we look at the performance of specific Solana NFT collections available on marketplaces like Magic Eden. Solana Monkey Business is, at the moment, seen as a top blue-chip collection for the Solana NFT ecosystem. Indeed, in the 24 hours after OpenSea's announcement, SMB accrued more than $2 million in volume. Now, according to Magic Eden, the floor price for a Solana Monkey Business NFT sits at around 240 Sol, currently around $33,000, meaning it's now competing with some of the top Ethereum-based NFT collections. Similarly, the Degenerate Ape Academy, another blue-chip Sol collection, has also seen an increase in interest and value. The floor price for one of these bad boys is currently around 92 Sol, and the collection holds a total volume of 1.13 million Sol, around $150 million. Data around volume by day and other indicative metrics for Sol NFTs are still not readily available, but this may be set to change as Sol NFTs go live on OpenSea. The question is now around whether or not OpenSea's integration is already priced into the Solana NFTs. Will we see another spike when said NFTs become listed on the world's largest NFT marketplace? Or will holders see it as an opportunity to offload their assets onto a whole new group of buyers? Much of Sol NFT's performance will likely come down to the price and excitement around Sol itself, which now sits at just over $136, having seen prices as high as nearly $143 in the last few days. This, in turn, will likely be in some part dictated by price action for the likes of BTC and ETH. Now, perhaps the biggest development to come to fruition in the last 7 days is the release of Citi's Metaverse and Money report, stacking up to nearly 200 pages. Citi's report discusses all manner of issues and topics surrounding the future of the metaverse, but there are some elements that we think are particularly interesting. The most obvious of these is Citi's prediction in terms of total addressable market, or TAM, for the metaverse. Coming off the back of JP Morgan's recent Opportunities in the Metaverse report that predicted the metaverse to become a $1 trillion market, Citi's estimates seem even more bullish. So, Citi is expecting a market of between $8 and $13 trillion by 2030, with an expected user base of a full 5 billion. Given predictions for world population by 2030 of just over 8 billion people, this is a crazy bullish call. However, Citi's report is keen to distinguish between the narrow and broad definitions of the metaverse, and those predictions are for the broader definition. The narrow take refers to the metaverse industry as pertains to virtual and augmented reality headset use specifically. Now, for this, they predict a market of between $1 and $2 trillion and a user base of between 900 million and 1 billion. This is relevant as virtual reality has become a buzzword when it comes to metaverse excitement, and it's important to remember that the two can operate distinctly. Indeed, Citi cites a lack of hardware readiness when it comes to VR headsets, which, despite improvements, now cost between $400 and $1,200 to acquire. This presents a serious barrier to entry for those who might use metaverses. And what's more, Citi points out the possibility for non-VR metaverses to perform well and capitalize on the hardware constraints faced by VR metaverses like Network. Projects such as Portals, built on Solana, have geared themselves towards being a purpose-built in-browser metaverse, presenting a much higher degree of accessibility. Now, Citi also believes that given the proliferation of mobile device ownership, smartphones could provide a key on-ramp for metaverse users if the metaverses themselves are developed and able to support smartphone technology. Citi also has further concerns over infrastructure readiness. Effectively, total metaverse adoption would require vast improvements in bandwidth capacity and latency too. Even the production of CPUs and GPUs able to effectively compute and render the metaverse in real time must increase, something typified by increased spending from the likes of Intel. Now, another interesting point made by Citi regards the two different strands of metaverse architecture, basically centralized or decentralized. Now, decentralization carries a strong narrative when it comes to community ownership and participation. However, according to a well-known cryptographer, decentralized metaverses will likely suffer from various symptoms. Perhaps most crucially, their inability to adapt. Decentralization is used to provide security and ensure the immutability and difficult-to-change nature of networks like Bitcoin and Ethereum, and it seems unlikely that a completely distributed governance system will allow metaverses to adapt to quickly changing circumstances and sentiment. It is possible that partially centralized alternatives will be able to compete on the basis that they can move fast and make platform changes quickly, owing to them having a centralized point of failure, but also governance. Now, these are just a few of many takeaways and interesting points made in Citi's Metaverse report. It's a hefty old document, but it's helpfully split into sections and well worth a look at, if the future of the metaverse is something you care about, of course. Now, before we conclude, it's also worth mentioning a story that, to our minds, is huge, and that seems to have been overshadowed by news surrounding NFTs on a certain network being integrated into OpenSea's UI, and one covered succinctly in a recent piece by The Block. And that is that the world's largest NFT marketplace is set to roll out Fiat payment options for its platform using payment provider MoonPay. The development would see would-be NFT collectors intimidated by crypto's complex processes, able to use payment methods such as Visa, MasterCard, Amex, and more to pay for NFTs. It seems that OpenSea has acknowledged the success of platforms like NBA Top Shot that place heavy emphasis on making their services available to non-crypto users too. A significant move when it comes to mass adoption of blockchain technology and the advantages that it has to offer. These Fiat solutions are set to be rolled out in batches of users. It's an interesting development that could see interest and ownership of non-fungible tokens increase once the service is implemented. Okay, folks, that's all for this week, and as ever, we're very keen to hear your thoughts. So, can the value of Sol NFTs be maintained? Will Solana NFTs pump even harder after trading begins on OpenSea? Are Citi's metaverse predictions the stuff of dreams or the stuff of nightmares? Is the world ready for metaverses to become a part of everyday life? And if so, which factors are most likely to hinder adoption? Let us know in the comments section below, and see you next time.